I think it's a very simple thing. I think Bitcoin is going to grow from 0.1% of the money in the world to 7% of the money in the world over the next 21 years. And of course, you should just go long and keep buying it. It'll go from like 1.8 trillion to $240 trillion. And it'll go up 29% a year, ARR. That is my base case. Every Bitcoin you don't buy is going to cost you $13 million, my friend. Bitcoin goes from 90,000 to 13 million.
Bitcoin is on track to hit $13 million per coin and dominate global finance, according to Michael Saylor, executive chairman of MicroStrategy. In a recent interview on the PBD Podcast, Saylor made this ambitious prediction, highlighting Bitcoin's unique scarcity. Only 21 million coins will ever exist. Describing Bitcoin as digital property, Saylor likens owning it to holding prime real estate in cyberspace. Its digital nature allows it to transcend borders and political boundaries, creating a secure and decentralized financial network. As adoption accelerates, demand for Bitcoin continues to grow, setting the stage for repeated price surges. Stick around until the end of this video to hear more of Saylor's insights on this game-changing prediction.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Basically, what I'm saying is that the 29% ARR is the risk-free cost of capital in the crypto economy. And the way you get to that number is Bitcoin's been going up about 55 or 60% a year for the past 4 years. It's been going up a little bit faster before that, but right now Bitcoin's appreciating 60% a year. The S&P index, which is the conventional cost of capital, is more like 14, 15% a year. So you've got like a 4x difference. The mainstream economy is plus 15 points, Bitcoin is 60. They're going to converge. As Bitcoin gets to the size of the S&P, when it's 100 trillion or 200 trillion and it's close to the S&P, it's going to be 1.5x the performance of the S&P and 1.5x the vol. The VIX, which is the S&P volatility, is about 15. The ARR is about 15. Bitcoin's like 60. I mean, you can figure it out from the law of large numbers. When Bitcoin's a $100 trillion asset class, it's not going to be as volatile. And of course, at some point, companies in the S&P are all going to hold Bitcoin. And so like if MicroStrategy gets in the S&P and Tesla owns Bitcoin and other companies, if Microsoft starts buying Bitcoin, pretty soon the performance of Bitcoin is going to goose up, is going to improve the performance of the S&P, and then Bitcoin's going to converge. Bitcoin's always going to be more volatile because it's 24/7, 365. And it's always going to be higher performance because it doesn't have the risk factors of property or companies and the like.
I think this is what you showed, right? You were showing this.
Yeah,
at the
that's the
presentation
chart.
we're at.
And
bonds, gold in the last 4 years, 6%, real estate 10, S&P 15.
That's a very useful chart. You can pretty much understand the world if you focus on that, which is if you capitalize on bonds, you're minus 5%. That's why all the banks are struggling, and that's why operating companies can't accumulate capital. Because what that's telling you is that if you're using bonds as capital, it's toxic. It's sucking 5% of your life out of you. And look at the cost of capital, 15%. So here, if you use bonds, you're minus 20% versus the S&P. That means that it's an awful, way to build shareholder value. If I asked you, do you want to hold $100 billion of cash in bonds and you're Apple or Microsoft, the answer is no, because it's minus 20%. You might as well just give it back to the shareholders. They put it in the S&P index. But now look at the other side, right? Bitcoin is 4x that. So if I said you could put $100 billion into bonds or $100 billion into the S&P or $100 billion into Bitcoin, which of the three charts do you want? It's pretty obvious. You take the 60%. So what MicroStrategy did is we capitalized on Bitcoin, which is 60%, and then we levered it up with cheap convertible debt and equity raises, and we got to 120%. And that's how we ran 30x. That's why we outperformed NVIDIA. We're 2 or 3x NVIDIA over this time period, because we're actually capitalized. Now, coming back to the idea of growth, look, the big idea here is there's $450 trillion of money invested in bonds, invested in real estate, invested in equity. by wealthy individuals, families, and institutions, and it's just for a long-term store of value. People that are wealthy just want to stay wealthy. People just want to keep their money. So they're buying these store of value assets from the 20th century, and those store of value assets, they kind of bleed 3% energy because of famine and hurricane and war and inflation and competition and obsolescence and accident and torts and unions. And fill in the blank with all the things that cause your investment not to work. That's 3% of 450 trillion. That's like 10 to 15 trillion dollars of entropy, of chaos every year. So the big idea is Bitcoin is just here. The money is just running from the 20th century to the 21st century. It's moving from physical space to cyberspace. It's moving from the finance space to the digital economy, the analog to the digital. What we're saying is sometimes the most lucrative thing you can do is do nothing. That is to say, I'll give you an example. You have $1 billion, you're in Africa, and I tell you, you can go and invest in anything in Africa. You got to hold it for 30 years. I'll give you 1,000 guys to analyze everything. Or you can buy $1 billion of Bitcoin. And you're like, well, the $1 billion of Bitcoin is doing nothing. I'm like, yeah, you're keeping the $1 billion forever and you're doing nothing. The $1 billion invested in Africa is I'm taking Egyptian risk. I'm taking Zambia, Central Africa risk. I'm taking Nigeria risk. I'm taking risk on that ranch. So most of the time, people have to take risks, and then they got to worry about it. Bitcoin is risk stripped away from the capital, and inflation stripped away from the capital. So when I evaluate any investment, my view is, okay, well, is it going to give me a risk-free 29% ARR? By the way, coming back to that, it's like 60% ARR collapsing down to like 20% over 21 years, and the average works out to 29%. And the assumption is the dollar supply keeps growing at 7, 8, 9%, and then you get an additional gain because we invent robots and AI and flying cars. And so the actual S&P index is growing because the U.S. prints more dollars. But it's also growing because we invent obscenely cool, useful things like the iPhone or like an electric car. So the future is good, but at the end of the day, Bitcoin's future is just pure digital capital. And I look at it as, why don't I just keep buying something going up 29%? All I got to do is borrow the money or raise the money at a cost of capital less than 29%. Over 21 years. And, it makes sense for us because we're a pure play, right? People want us to do that. I mean, the people that are short, they want us to be pure play.
MicroStrategy, the business intelligence company led by prominent Bitcoin advocate Michael Saylor, has announced plans to raise $1.75 billion through the sale of convertible senior notes, a type of loan that can later be converted into company shares. The proceeds from this offering will be used to purchase even more Bitcoin, further solidifying MicroStrategy's position as one of the largest corporate Bitcoin holders. This bold move could have a significant impact on Bitcoin's price. When a company like MicroStrategy commits such a large sum to acquiring Bitcoin, it reduces the available supply in the market. With Bitcoin's capped supply of 21 million coins, substantial purchases like these can drive demand higher, potentially pushing prices upward. As more companies and investors witness MicroStrategy's unwavering commitment to Bitcoin, confidence in the cryptocurrency is likely to grow, leading to increased adoption and investment. Now, let's return to Michael Saylor as he dives deeper into the implications of this strategy.
What I'm saying is, if you have a chance to buy Manhattan for 60 guilders in 1626, you should buy it. But what I would say, which is deeper, is you could buy Manhattan real estate every decade for 300 years and always pay more than the previous guy paid, and it would still be a good idea. And that's because it's the greatest city in North America. Yeah. Everybody wants to do business there. There's a limited amount of land. It's a perfect rock, limited amount of land. So there's never a bad time to buy Manhattan. But I mean, look, the takeaway from that slide is the key to getting rich is by scarce, desirable property, pay for it with fiat. How much is a guilder worth today? Like, pay for it with money you printed, borrow the money, but We borrowed the money to pay for Alaska. I mean, the country was broke in 1867. We just fought the Civil War. But what did we do? This guy Seward had the vision to print a $7.2 million check, pay off the Russians. And so number one thing, buy the property. Number two thing, hold it for a long time, right? I mean, because it might not feel like much, but when you're compounding over 100 years or 200 years, and so what do all those four have in common? Well, they're all something you would want to hold for more than 100 years. And so what is Bitcoin? Bitcoin is the next frontier. We've already gone as far west as we can go. Now we have to go to cyberspace. I mean, eventually we'll go to outer space, but we're waiting for upgrades in propulsion to go to Mars and the asteroids. But between now and then, you go to cyberspace, and the real point is Chinese billionaires, Russian billionaires, African billionaires, South American billionaires, every company on the planet would rather have their money in the U.S., but they can't get it to the U.S. So where else can I put it? I can put it into the city of Bitcoin. I buy Bitcoin, I sell Africa, I sell Venezuela, I sell Russia, I sell Siberia, I sell China, I buy Bitcoin. Bitcoin is digital capital. Everybody wants it. Everybody knows about it. No one can steal it from you. And what's the use case? Well, the use case is to get rich or stay rich, which is like half of everything, right? The great irony is people can't figure out what it's good for. It's like for the last 10,000 years, people have been trying to figure out how to get money and keep it. What it's good for is the wealth that allows you to power your family, your country, your company. Bitcoin is a major revolution because starting in 2025, you can account for Bitcoin on fair value basis, which means that Bitcoin is just as good as Treasury bills, and it's a commodity, so you can have 100% of your balance sheet in Bitcoin. And what that means is Microsoft, if they just stopped dividending out their cash flow and stopped buying back their stock and they convert it to a Bitcoin buy, and you crank in like a conservative, like a 21% assumption, like half their cash flow in Bitcoin, you make $1 trillion over 10 years. You put all your cash into Bitcoin, you make $2 to $4 trillion for the shareholders, right?
If Berkshire did that.
No, if Microsoft did it.
If
Berkshire did it, they would make more, right? I mean, they've got if they flipped that, put $300 billion into Bitcoin and grow 21%, you're generating $60 billion a year of investment income.
Michael, how much do you cold call? Like meaning, how much do clients call you versus you call them? Are you also
people
prospecting?
Contact me?
Okay,
like I'm not out there. Like I'm not out there trying to get in the doors to pitch this. I just do it as a public service. I mean, my day job is I focus on MicroStrategy and our capital markets activity, and we're going to do an equity or a debt raise or something. And then my copious free time, I advocate and educate on Bitcoin. And then as a result of that, I've got 3.7 million followers, so I get a lot of inbound people. I talk to people like Similar Scientific, where the CEO calls me and says, I want to talk about what you did, explain it. And I'll get inbound calls from people that want to be on a Bitcoin standard, and I'll explain what we did and how we did it. And sometimes I'll brief the board of directors or the officers and directors.
Michael Saylor remains steadfast in his belief that Bitcoin will outpace other asset classes as it becomes the centerpiece of the global financial revolution. Its unique trifecta of scarcity, decentralization, and technological resilience positions it as an unrivaled alternative to inflation-prone fiat currencies. Saylor predicts that as adoption by institutions, governments, and individuals grows, Bitcoin's network will only become stronger, creating a self-reinforcing cycle of growth and value appreciation. Additionally, advancements in scalability solutions will enhance Bitcoin's accessibility and versatility, paving the way for unprecedented price increases. With its innovative foundation and expanding use cases, Bitcoin is poised to redefine the future of finance in ways we can only begin to imagine. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.